Hello, my name is Nicholas Rantham. Today I will be doing a presentation on GE, the company. Um, GE was founded in 1890 by Thomas Edison, the famous American inventor. The company was originally called the Edison General Electric Company. 15 to 20 years later, they actually just narrowed it down to General Electric as the company we know today. GE was basically started, their roots was all about electrical innovation, famously or known famously for creating the light bulb. That was one of the original companies, was just around the light bulb itself. They brought electric energy to homes and lit homes. If we remember back in the day, before that was the case, people had to light their homes with candles and things of that nature. So, very dangerous. Even though electricity is dangerous, they made it very consumer friendly, and that was really the birth of GE. The headquarters is currently located in Boston, Massachusetts, as of today. GE is a very global company, as we all know. They are actually operating right now in 170 different countries and slightly over 300,000 employees. One of the largest employers in the world. And this was about 2018, February. Actually, when I went on the investors report, I believe it was 312,000 and some change as far as folks that they had. Again, GE is very large. They have a portfolio of multiple different companies: aviation, healthcare, power, renewable energy, digital, capital, transportation, lighting, current, powered by GE, and Baker Hughes, a GE company. And these are some of the recent awards that GE has gotten over the last year and a half. So, most ethical company, fast company, Fortune's most admired company, human rights, Interbrand, and Working Mothers Best Company for Working Mothers. So, some awesome awards there. Onto the management itself, I just really focused on this slide to really just talk about John Flannery. As you see with all the different companies in the portfolio of GE, there's a lot of different presidents, vice presidents within each of the brands itself or businesses. So overall, just wanted to talk really quickly about John Flannery. He, as of recently, 2017, I believe August, he took over as the CEO. John has been with GE for quite some time, actually the year that I was born. So if I do the math correctly, 36 years almost. So he's been with the company for quite some time. He's actually spent most of his time in GE Capital, and was overseas for quite some time as well as running the India GE business for India. I know he's kind of blazed the trails of being that global company, as he spent quite a bit of time over there developing that and making those business relationships overseas. 2013, he was the head of the business development for all of GE, so another huge role. And as I said, end of 2017, he was named CEO of GE. John also was a part of GE Healthcare for quite some time. He recent role was the CEO of Healthcare before he was named the CEO of GE as a whole. So some big numbers here, but this basically breaks out the businesses as a whole for 2017. So everything is in billions. So this is the basically rack and stack of the size of how big the businesses are right now. So power leading the way right after aviation, healthcare, oil and gas, and renewable energies, capital, transportation, and lighting. And oddly enough, lighting being the smallest one and one that I totally anticipate getting sold off pretty soon here. It's really not part of our core business, and it's really not anywhere near the lighting. Transportation is pretty pretty surprising, as we do a lot with railroads and things of that nature. So surprising to see it that low. But here again is the overall portfolio of GE for 2017. GE is definitely a global company. We are currently located in 38 different states within the United States and Puerto Rico. Within that, there's about 191 plants. Outside of the North America, we have around 348 manufacturing plants located in 43 different countries. So definitely very global. As some folks have heard or not heard, GE definitely had a rough 2017. Very little highlights to highlight. So I'll just kind of run through some of these, some of the numbers. Basically, overall revenue stayed flat. Margins decreased almost by half, down to 6.7%. And then, as you can see, more negative numbers across the board. Cash flow, EPS, negative, going on and on. So very rough year. The stock has definitely taken a hit, as you may or may not know. We'll be covering that in the next slide as well. Here's some of GE's ratios. Free cash flow being at $3.6 billion for 2017. Return on equity 7.59. Prices per earnings ratio, PE, is at 12.71. Current ratio 1.87. EPS being at 96 cents, and the dividends per share 12 cents. And debt to equity 132.44. As I stated, the stock performance has been very rough. Our stock is basically almost cut in half, but currently, as of yesterday, the stock has actually risen a little bit. It's a $14.54 per share, and as you see in the 52-week range, we were down to 12.73, and the high of $30.54 per share. That was where it was hovering for quite some time. So we took a huge cut. It only sounds like a couple dollars, but as far as how much stock is actually out there, it was quite a bit of a hit for GE as a whole. But the market cap is 123 billion. It's definitely a large stock, and the dividend yield is 3.3%. This slide gives a little bit of a longer look at the GE stock. As you see on the top two bars are the highs and lows for those quarters. So as I stated before, we were upwards in the 30s, and then ending the year in fourth quarter for 2017, we went all the way down to $17.25. And as I stated before, currently, so we are at 14.54 per share. The dividends, as you see, we stayed steady quite some time, and I believe this even went longer out. If you even go further out in 2016, they actually had the dividends staying steady. This is another black eye that GE took, but they had to free up some more cash. But they reduced essentially the dividends in half. I know working there's a lot of retirees that gained a lot of stock over some times and really relied on that dividends, and they're hurting pretty bad now. But I think these are all necessary steps, and I'll cover some of this more in the recap or the conclusion of GE. Again, kind of a different look at the earnings per share, more of a length of time. Gives you a better look, I think. So as you see, we were trajectory to having a really good September 2017. As you see, the forecast had us upwards of 50 cents earnings per share. However, we started going the negative way, but that's when all the bad news kind of started happening and uncovering all these bad press, if you will, about GE. So as they have March 2018, we're looking forward to hopefully beating out that forecast. And as you see, they're forecasting a pretty successful 2018 as we're taking some steps to free up cash and sell off things and things of that nature to make the stock price go up. So as I continue to talk about, GE's had a rough 2017. They really have to put some things in place to really turn around the stock. So these are some of the action plans or goals, if you will, that the senior leadership team is putting out to the entire team. So these are the 4 things that we're really going to be pushing for 2018 and further. So number 1, delivering outcomes for the customer. The CEO talks about it time and time again. We have to be as close to the customer and deliver for the customer. The customer is number 1. I think he says it in every one of his weekly conversations or report outs to the entire team. He always talks about customers. Number 2, strengthening our business to thrive in decades ahead. So we are trying to get out in the forefront, as I talked about in some of the other slides, having that forward thinking, getting ahead of the market, things of that nature to really drive new businesses. As I've talked about before, additive manufacturing is one of them. That's not a lot of people are doing it, but it's basically metal printing things, and the designs are unlimited. So to have something like that, get ahead of that, I think that'll open up a whole new ball of wax, new businesses, new markets, things that we've never had in this current age. So forward thinking, running the company for cash. Cash is king. I know John is very transparent when he talks about things. He doesn't shy away from the importance of having cash and being able to free it up and finding ways to free it up even more. One of the things I know even our plant is doing right now is having inventory in our stock room that we don't own. So we literally don't own it until we consume it out of our stock room. So we don't pay for it either. So it literally sits in our plant until we consume it, and then we pay for it. So it's stuff like that I know some manufacturing plants are already doing, but it's the step that we're taking to free up more cash. And number 4, drive a culture of candid and accountability in our teams, and that's another one that John always talks about is, when you say do ratio. So if you say you're going to do something, you do it, and if you don't, you hold your team accountable, yourself accountable. That's the only way we're going to get better. So those are our top things that is just going to really change the company and things that we're going to be focusing on going forward. So to wrap all this up, just put it out there right now. I'm invested in GE. I feel that we have a lot of things in place to continue to make the company better. GE Healthcare that's the part of the company that I'm a part of. But I really believe in John and the leadership team and the things that they talk about. So I'm investing. Even though the research and the numbers may tell a lot of people to stay away, I think it's a long-standing company. They have a lot of things in place, a lot of things that's been around for a while that is good, and a lot of things that they're pushing forward to ensure that the company is going to be great and going to be around for another 100+ years. So as I talked about the internal programs to some of the things I believe is helpful. They have a lot of internal programs to obtain and retain some of the talented people. You're only as good as your people, and I could tell, being in the company for the last 4 years, I've met some very special and very smart people that will continue to make this business even more profitable. We are changing our portfolio. We're selling out parts of the businesses that don't make money or don't make sense. So I know John is really pushing for that. I believe it's $20 billion in assets that he's going to be selling off. At least that's his goal that he told to the board. So I think they're taking the right steps, doing the right things to free up cash and do the things that we need to do to make us successful. They have a lot of great products. I mean, it's a company that has been around for a long time and has a lot of really, really positive things and really a lot of really good products. So that's always something that to me, if you're going to be buying a stock, you want to make sure that their core business makes a lot of sense. And as I talked about additive manufacturing, I think that's going to be a huge one going, 20, 30, 40 years down the road. That's the way that things are going, additive manufacturing. So this is technology that GE's proving out and developing, and going to be a very successful company. So again, blazing the way. I think that is another reason to invest in it. And like I talked about, they're cleaning up their balance sheets right now to make the stock even more profitable. So overall, I personally think it's a discount buy right now, and this company will come back bigger and stronger and back to running the way it did in the the 80s and 90s. So thank you for sticking around and listening to my presentation. Hopefully it was informative, and again, thank you for your time.